What's good, Forexia fam? Thank you guys for tuning in today. Today's video is on daily structure, characteristics, and purpose. I know we haven't uploaded a video in quite some time, so this one is really going to make an impression on you guys. This is going to be packed with so much value. Whatever you do, do not click out of this video until the end, until watching the entire video, because I promise you guys, if you watch until the end of this video, you are going to have such a mind-opening experience in Forex. The pieces of the puzzle are going to fit together so much easier. So, turn off any distractions you have. Turn off your grandma if she's over there talking to you. Whatever there is. If there's the TV on, you got your phone next to you, blaring notifications, whatever it is, put it on pause for the remainder of this video so you guys can absorb this knowledge, because trust me, you do not want to miss out on this. If you have, you can take this time to get a pen, a pencil, get a notebook as well, jot some notes down. Like I said, this is going to be on daily structure, the characteristics and purpose of daily structure. So, this applies to every single Forex pair. We're going to be going over Euro USD today. However, this applies for every single pair, every single time frame. However, we're going to be focusing on the smaller time frames today, such as the 4 hour, the 1 hour, the 15 minute, the 30 minute, so that we can see the daily structure just a little bit more clearly. This applies to micro and macro. So we're going to be looking at these daily structures on micro, on the daily. However, this applies as well to macro. Why? Because this is a fundamental structure that plays out, you guys. This is so fundamental. This is like the vertebrae or the backbone to how the markets are created, how the trends are created. And I promise you, nobody else is teaching this. You can go on a million other videos on YouTube. They're teaching you to follow the trend, support and resistance, trade off the trend line, trade off the support, sell off the resistance. They're teaching you bullshit. All right? Nobody is going to give you the in-depth knowledge that we are giving you guys, the understanding of how trends are created. Sure, everyone out there is going to say, follow the trend. Go with the trend. The trend is your friend. However, do they ever teach you how the trend is created? What is the fundamentals behind the trend? What are the characteristics, right? Why a trend is created, the way it's created? That's what we're going to be going over in this video, you guys. So stay tuned. If you haven't already, smash that like button, smash the subscribe button, and we are going to blow some minds. So, the daily structure. As we know, the daily structure has certain specific characteristics to it. Now, to give you guys an idea, right, so that you guys can't say that I'm just talking out of my ass, I'm going to show you exactly what I mean by these specific characteristics. So, every single day, now, to help you guys, let's go into TradingView.com, right? And then go to Settings, Session Breaks. This is very important because this is going to show us the start of the day and the end of the day. So that means that everything in between the start and the end is what we have as the daily structure. Okay? So that means that this is one day, this is another day, this is a day, this is one day, this is today, right? What I'm going to show you is that these specific characteristics are reflected throughout every single pair And every single day there is going to be a consolidation period. Have you ever noticed that? I'm sure, right? You've gotten into a trade in the middle of the day, and you notice that it's whatever, it's on support, resistance, whatever your strategy is, and you start buying, you start selling, whatever. And have you ever noticed that if you buy like in the middle of the day or at like 1 o'clock, 2 o'clock, I guess it depends what your time of the day is or whatever. But have you ever noticed that if you buy during the day, you are going to be sitting on your hands with zero profit most of the time because the market moves so little? Have you ever noticed that? But yet, as soon as you go to bed, it's like the market just turns on, and it's like this window of volatility opens, and as soon as you wake up, right, it's over, and the consolidation sets in, and you're just waiting for another opportunity. But yet, this is what happens. Have you ever noticed that, you guys? Have you ever felt like that? Have you ever felt like, wow, why is the market not moving? That's what we are going to discuss today. That's what we're going to unlock for you guys today. Check this out. Have you ever noticed this? Isn't that crazy? It's almost like there's a specific time for the market to start consolidating, to start ranging. Okay, interesting, right? Day after day after day, we've gone through how many days now? And we see the same pattern, right? It's the same pattern creeping out on us. There's always, it seems like there's always this consolidation phase where this blue line is. And remember, what is this blue line? This is the start of one day and the end of the next day, or the end of one day and the start of the next day. And we can literally keep going and copying and pasting this into infinity. If you guys want, you can backtest this. I'm backtesting this with real data, with like, very, very present data. However, if you guys want to go back and test this since like the 1900s or like 1999, 1998 or 2000, 2001, it's the same exact pattern. It's the same thing. Okay? And what am I trying to get to here, you guys? I'm trying to get to the fact that there is a certain time that you should be trading. Okay? There's a specific time to trade, and this is not that time. Okay? Does that make sense? Why would you want to trade during this time, during this consolidation? And I just showed you back to back days where this is happening every single day. Okay? So, what does that mean? It means that every single day there's a phase of consolidation. There's a specific time that the market dedicates to not moving at all. And what happens to a lot of people that are expecting a move to happen? Well, they close their positions. They emotionally get unstable because they thought, okay, I'm just going to buy right around here, or right around here. And then market's going to move up, anytime with me. And what actually happens? The market stays in consolidation for 13 hours. How many new traders can resist staying in a negative floating position or zero for 13 hours? A lot of people can't handle that. A lot of new traders can't handle that. So they close their position. What happens if this plays out day after day after day after day after day? Think about that. I'm sure that's happened to you guys. That happened to me when I started trading. I was like, what is going on? It's like as soon as I get into a trade, and it's because I didn't know these things. It's like as soon as I get into a trade, the market just stops moving. And a lot of the reason behind this is because the market will make a move, right? The market will make a big move, and then a lot of people will see this move and jump in. But little do they know, the move already happened for the day. The market dedicates very, very little time to make their move. The rest of the day is spent in consolidation. Consolidation. They dedicate 4 to 6 hours to make their move. The rest of the day, 18 to 20 hours, is spent in consolidation. This is a fact. And this you're not going to learn anywhere else, you guys. So, if you like this video, do me a favor, smash that like button, subscribe if you haven't already, smash those bell notifications, whatever that is, so that you guys can see our new videos and get notified every time we make a new upload. All right, let's get to the sauce. Okay, let's get to the why we're here. We're here to understand this daily structure. Okay, the daily structure, the characteristics, and its purpose. We already know somewhat of the characteristics, right? There's a start, there's an end to every day. That's obvious. However, in between the start and the end, there is a dedication of time, a window of opportunity where the market is more volatile. And on the outside of this resides these consolidation phases. These phases where the market just stops moving or moves sideways, right? Nobody likes it when the market moves sideways. Buyers don't like it. Sellers don't like it. So that's a trap that the dealer uses to manipulate the masses, because nobody likes a sideways moving market. Is that not true? So it is an easy way to take out buyers and sellers simultaneously. Now, let's get into the purpose and a little bit more in depth on the characteristics, right? We already know that the day starts with one day ends, right? If this is day 1 and this is day 2, this day ends in consolidation to start the next day in consolidation, to connect, right? To connect with one and another, this type of structure. So if we take this consolidation, and excuse my art, I'm using a trackpad, I'm not even using a mouse. But let's say this is the consolidation, right? And in the middle, we have that move where the market all of a sudden becomes a lot more volatile than normal. And then, however, we end the day in consolidation. So the day starts in consolidation, does its whipsaw or its manipulation or its volatile move, and then it ends the day in consolidation. This is anywhere from 10 plus hours of consolidation for each the start and the end of the day. And then in the middle here is about 4 to 6 hours of movement. Okay, so you guys, I really want to break this down as much as I can here without it being boring or anything like that. Hopefully it's not boring. Let's take this and realize, what is actually going on here. So this is that daily structure, right? This is the daily structure that we are talking about. And you can't see it every single day. It's not like every single day it's going to be this perfect, right? It's not like every single day it's going to be as perfect as it was 2 days ago or 3 days ago, right? These are perfect examples. However, it does give you that structure where you see obvious consolidation, there's more of that volatility, and then ends the day in consolidation. We see this every single day, you guys. Every single day for the past how many weeks that we've been backtesting. And we could backtest for weeks and weeks and weeks and weeks more on any single pair, and we'll see the same exact example over and over and over. I guarantee it. So, what does this mean? This means that this, for some reason, right? This is like the heartbeat of the market. This is the underlying, the fundamental structure behind the creation of a trend. This is what nobody is teaching. This is what Forexia teaches. This is what we teach in our academy. This is what we teach, for free every once in a while. Not as in-depth as we do in the academy. If you guys want to join the academy, if you're not in the academy, you're missing out on so much. Forexia.net/academy. Just check it out. Go there. Do yourself a favor. Got a massive community of people all learning, all banking off this knowledge. Look at this. Look at this. The high of the day, the low of the day. This is one day. The start of the day, the end of the day. Start of one day, next day, the end of the next day. Right? This is 3 days now. Oops. 1, 2, 3. So in 3 days, just repeating that daily structure 3 times in a row, what do we get? We get a trend. It's that easy. It's literally that easy. That's the fundamental. This is the fractal structure that makes everything possible. And you can find this mirrored on every single pair, on every single time frame, whether it be in micro or macro, whether it be on the 1 hour or the 1 minute or the 1 month time frame. You'll see this structure everywhere you see a trend, because this is the fundamental. All right, there's always going to be a period of consolidation, a breakout of that consolidation, which normally will either create the high, just like we see here, or the low. Okay, we saw here it created the high. Then what happens? The market reverses off that high and creates a low, and then reverses off that low and ends the day in consolidation. Now we can see it here perfectly, absolutely perfect. Not really right here. I mean, it's a pretty good example, but right here, this day right here. An absolute perfect example of this trend, of these 1, 2, 3 days. And we got day 3. So I haven't even gone over the sauce yet, you guys. Yeah, I haven't even, you guys, if you have been mind blown yet, smash that like button. We are going to go so much more in depth. There is so much more to learn with this. I don't even know if I'm going to fit it all in one video. I'm going to try and make videos that are like 20 minutes, 30 minutes, because I've made like hour-long videos, and you guys, a lot of people don't even watch past like 30 minutes. I don't know, attention span nowadays, TikTok and shit like that, destroying people's attention span. But it's good. It's good. It's whatever. We're going to be just making some attention span videos. All right, so I don't know why I put that there. This daily structure combines with the sessions as well. Couldn't leave this one out for you guys. Anybody that has already studied us, has already studied our material, somewhat already knows about this, what I'm about to speak upon. But it's going to be a really good refresher. So stay with us. This daily structure, right? This structure right here has the characteristics. These characteristics are actually emulated or reflected by the sessions that play out on a daily basis. So what are the 3 main sessions? Now, I know there's more than 3 sessions in Forex, but we go over 3 main sessions. It is Asian, London, and New York session. These are the 3 main sessions that we like to take into consideration when looking at this daily structure or when trying to understand what the market is going to do next. Because lo and behold, each and every one of these sessions has a specific characteristic. Just like how the daily structure has its characteristics. And actually, the daily structure's characteristics are presented by these session changes. The session changes are what cause these characteristics shifts in the daily structure. So, Asian session, this is the first session of the day. Okay? When we look at Asian session here on our chart, I have marked it out in green. Asian session, yes, it is the consolidation session. It is the consolidation phase where the market spends its time in consolidation. Also, this is mostly the time that a lot of retail traders are taking their positions. And why is that? It's because they're waking up after New York session. They see the New York session moves. They think the New York session move is going to catalyst into Asian session, when in reality, and keep moving, when in reality Asian session sets into consolidation. Why? Because that's its characteristic. Because there's so many people that want the market to move that just the fact that it doesn't move is so upsetting to these people that they take out their positions, and a lot of these times they close their positions in losses. Asian session. This is Asian session characteristic is right here. Asian session consolidation. Okay? Asian session consolidation, like I said, it lasts, the consolidation, right, can last anywhere from 10 plus hours, 10 to 15 hours. Now, next we have the London session. The London session is, once we get to London session, there's more volatility in the market. Why? Because each and every one of these sessions is comprised of a new set of people, a new set of eyes. Why? Because a lot of people that were trading Asian session are now going to bed London session. And the people that were sleeping Asian session are now waking up London session. So there's a whole new set of people. That means there's a whole new set of belief systems. So coming into London session, we have this Asian session set a trap, a consolidation. What happens next? After this Asian session consolidation, there's always going to be a breakout. Okay, there's always going to be a breakout come London session. When is London session? London session is 10 hours after, or 10 hours into the day. Okay, just think of it like that. 10 hours into the day, you can take this blue marker right here. You can click, and you can use this ruler right here. And we can see right here is 10 hours. Okay, this is 10 bars, 1 hour candlesticks. At the 10-hour mark is the start of London session. So we can see this perfectly. It's picture perfect. We have Asian session consolidation right here, picture perfect. Then 10 hours later, right here, it would be this candle. I think it's that candle, right? Maybe it's the next one. Yeah, it's that one. This right here, this pink candle. This is the breakout candle of this consolidation of Asian session. And what do you know? That's the characteristic of London session. London session is the breakout of Asian session consolidation. So the characteristic, right? If we have Asian session and Asian session's characteristic is consolidation. Then we have London session coming next, which is the breakout of what happened Asian session. Now, we got to think about this here. What are the belief systems happening right now? A lot of people that were trading Asian session here are now sleeping. There's a new crowd coming London session. Now, London session people see this right here, this consolidation. They're going to be placing support below it and resistance above it. The breakout now of this consolidation phase period is an induction. It is a manipulative move to make the masses take positions against the big banks. All right, the big banks, the institutions, the hedge funds, these people all need our money in order to take a massive position against us. So, for example, Bill Gates doesn't play around with Euro USD, a standard lot on Euro USD. No, he's using 1,000, 10,000. He's maybe using 1 million standard lots. He's taking positions with 1 million standard lots. What does that mean? In Forex, there's always a 1-to-1. For every buyer, there has to be a seller. So for every seller, there has to be a buyer. There always has to be the two to complete each other. So if Bill Gates right now wants to sell and he has a 1 million lot order position, he needs 1 million people on the other end with one standard lot account buying his sell orders to complete his order, to fill his order. Does that make sense? Hopefully that makes sense. So, Bill Gates, what is he going to do? He has a 1 million standard lot sell position on your USD that he needs filled. What he's going to do is he's going to cause a breakout, a simple breakout. He could, put a 100,000 lots on here, or even 1,000 lots, a little tiny buy here, or just wait, right? Wait until this breakout occurs, and what happens? The masses are going to see this as a breakout, and they're going to start buying. Why? Because that's what they've been taught. Buy the breakout. The breakout, this resistance, is now turned support. Oh, okay, we can buy it. We can buy off support. It's an uptrend. Oh, it's an uptrend. Go with the trend. Just go with the trend blindly. Blindly go with the trend. It's making new higher highs. Oh, we're going to buy. Right? So this is what I'm talking about, you guys. This is the manipulation. I hear people saying, no, that's just, that's supply and demand. This is just supply and demand happening. BS, this is supply and demand. This is a fundamental structure that occurs because of the belief system that we've been taught. We've been taught to buy the breakout blindly, to go with the trend blindly. We've been taught that the creation of higher highs is a signal of an uptrend. All of these confirmations that I said here, these are all confirmations for retail traders, the masses, to start buying into this. When in reality, what happens? This is an induction. This is nothing more than a pump, a liquidity grab by the big banks, by Bill Gates, so that he can sell off his 1 million standard lots. As soon as his order is filled, say goodbye. And notice that once that move is made, right, because there's always, okay, out of this consolidation, take notes, you guys, please take notes. Out of this consolidation, 90% of the time, the breakout is going to be the false move. What does that mean? So there's going to be consolidation, Asian session, and then London session, there's going to be a breakout. This breakout normally is the false move. Normally, a lot of times, right? Not all the time, but a lot of times the breakout is this false move against either going with the trend so that people can, the masses can jump into this as buy positions, right? And then what happens? The real move occurs. And then the day ends in consolidation. So that the people that bought into here, they got their stop losses hit, or they closed out manually, or they're in massive drawdown. But what happens? They see this move. They see now that, okay, maybe I wasn't right in this with the uptrend, with the buy position. So I'm seeing these red candlesticks moving down. What's going to happen? A lot of times, right? This is even right here. This is a perfect example of support being broken. And now right here, look at this fat candlestick. Right after this fat candlestick comes $10 hours of consolidation. So let's say a lot of the masses sold just because of this. You know, they saw this move happen. They saw this breakout of support. They saw this big fat red candle here. They're going to start selling. But what they don't realize is that the move already happened. The move is done for the day. Okay? The next session coming is Asian session consolidation. So why would you take a position knowing that this is happening? At least they don't really know that. Now they do if they come to watch this video. Hopefully you guys are taking notes. Hopefully you guys now understand that this is all a big game based on the belief systems that one is taught. Right? I could go to Baby Pips right now. I could go look up any Forex video that's trending on YouTube right now. And what is it going to be? It's not going to be teaching you this. It's going to be teaching you how to buy off support and sell off resistance. All right. We took one day. We got one day and we kind of broke it down. There's a lot that's happening. There's a lot that's going on, you guys. And hopefully it's not too overwhelming. Hopefully you guys are really understanding this, because this is how the market works. There is nothing else. There's no substitutes. There's no other strategy. There's only this. There is only, right? Because the market makes trends. That's a fact. It's a fact. However, there's something behind the creation of a trend that nobody understands. Nobody's teaching, that nobody is putting together except us. Now, these different characteristics, I think we're way over like my 30-minute limit, so whatever. Fuck your tiny span of thought, you guys. I don't know. So let's say this consolidation occurs. There's the breakout. You see this. All right, my art is absolutely terrible. So we kind of went over this. This is that structure that we went over. Now we see a somewhat different structure. However, it's the exact same concept. The exact same thing, the exact same structure, however, inverse. So that breakout is inverse. Now, let's take a moment here to realize what's happening. Okay? This structure is basically this structure, but inverse. Right? And not as perfectly complex. But we see all of the different characteristics here. We see the start of the day, consolidation, end of the day, consolidation, and let's see. We have 10 hours right here. Let's mark it out exactly right here. What do you look at that? At this exact candle. This next candle is that breakout. What do you know? Right exactly when London session starts, that breakout occurs. And it's exactly, like I said, would happen 90% of the time. The breakout is an induction. It's the fake move, right? What do we know is happening here? We know a lot of people saw this as a breakout of support, turned resistance. They're going to start selling this. They see a small little trend starting to form here. So what happens? A lot of times, right? It would make sense that this breakout now isn't going to go to the upside. Rather, they're going to break to the downside because that's the bias that the masses have. And also, not only that, but you see this support? We have support after support being broken. So these are multiple confirmations as well for the masses to start selling. They sell into this candle. They sell into that London session breakout candle. That's the induction. They're induced to sell. And then what happens? The low of the day is created. And they reverse off that low. And what is going to happen here? What is this big, massive move doing? This is taking out all of these sellers that were induced in this sell position, in this little trend here. And then you zoom out and look at the macro perspective, and we're still in this trend, right? We're in the second day formation of what looks to be now a downtrend. And we don't really even know this until we see that second fractal day turn out. We see day 1, we see day 2, we see the low of the day and the high of the day, and we see that window. This one was 6 hours to create between the low and the high. Maybe less. Let's take the next session. The next session is New York session. So New York session is the reversal session. Let's actually look at day 1 here, because here we can see New York session reversal happening very, very well. New York session, so we have after 10 hours, we have London session. 5 hours into London session is over and New York session begins. So that means 15 hours. Whew. Get a drink of water. All right, fam. We back. 15 hours. 15 hours after the start of the day marks New York session. Now, New York session is special because, like I said, a lot of times that breakout session, that breakout of London is a false move. It's not the directional, intended direction of the market. It's that the induction, in order for the big banks to create or generate the liquidity needed to fill their positions and make the real move. So what happens here is we see after 10 hours that London session breakout. This is the London session breakout. And then right here, this candlestick marks New York session. What is the characteristic of New York session? It is a reversal. It is the reversal against the move that was created London session. So a lot of times New York session is actually the real move. Not all the time. However, it depends on what's happening, right? Asian session, the characteristics, London session, what time it broke out. But this is a perfect example, you guys. This happened 2-3 days ago. And here we're working off that example again, a perfect example. And you can see this happen live in front of you today. Asian session, consolidation. "10 hours in, we see the breakout. And now we could see a retracement for New York session as this reversal, because we saw London session creating the high. And if London session creates the high, a lot of times New York session will create the low, vice versa, just like we've seen here in these different examples. So let's take this. We're looking at day one. We saw these perfect three characteristics, three session characteristics to create that daily structure. Start of the day, Asian session consolidation, last 10 hours. 10 hours into the day, we have breakout of London session. We have that induction to the highs. We have all those confirmations for retail traders to start buying into that trend. And then a lot of those people that were actually trading London session are now going to bed, right? They're now going to bed come New York session. We have a switch of eyes. We have a switch of belief systems. So the people that see now New York session, they get up New York session, they see this breakout, they want to get into this breakout. They want to get into this trend. So they even start going with this trend. It even feels more liquidity for these positions of these massive institutions to get filled. And this happens over and over and over again and repeats itself over and over in order to create a trend, you guys. Okay? So we're going to go over this one more time on the second day. This is 10 hours in, right? We have the breakout. And then we're going to look for 15 hours in. 15 hours in, right here, is the start of New York session. New York session, right? An hour later, an hour back into New York session, they create the high of the day. London session was dedicated to create the low. New York session, now they create the high, and they work off that session, reverse off of that high, right? New York session reversal, and then end the day in consolidation. Okay? This happens over and over and over and over. Now, let me see if I have some more examples. Start of the day, we can see there's pretty obvious consolidation. $10 hours in, right here, this exact candlestick, right here, notice, that's the candlestick that broke out of that consolidation. 10 hours later, opening of London session. The false move is the breakout. Then what happens? They dedicate 4 to 6 hours to move the market and then end the day in consolidation. Here you can see a perfect example of that. Let's see here another example. Some days, right? Some days you can see it. You can see that consolidation, pretty obvious. You can see the move happening in between, and then you can see the day ending in consolidation. However, they don't give us that perfect opportunity as an entry. Now, I wanted to speak about and to get wanted to have enough time in this video to talk about M and W entries, because every single day this structure forms out. There is an M and a W, right? There's an M formation, there's an M reversal pattern, double top, whatever you want to call it, and there's a double bottom, W formation. Now, this is what I started trading this was like my main strategy when I started trading, when I started getting good at trading Forex and becoming a profitable trader. This was my strategy. This is what I started with, the M's and W formations. Why? Because it plays out almost every single day on a daily basis. So here we can see a perfect example of this. We have Asian session, consolidation. Let's see, 10 hours into Asian session consolidation. What do you know? Right there. Exactly, perfectly on the dot. Right here. The high of the day is made perfectly for London session, right? And we can see even before London session, they started breaking out. So we have a rule of thumb. 2 hours before and 2 hours after the session opens, there is that window of opportunity where you can get into a trade. Now, like I said, I can't go over this so in depth with you guys because the video is already like an hour long or so. So if you guys want to learn more about these M and W formations, the strategy, the exact strategy that we use to take positions on these moves, right? These are the biggest moves that happen in Forex, you guys. Why? Because they're the banks that are behind them. The banks are behind these moves. So before I go, I want to show you guys the M and W that occurs on almost every single day, right? You see the M formation, that double top, reversal. This occurred London, and then we can see that first leg, second leg of the W formation that happened New York session, right? Let's just double check to make sure this happened exactly 15 hours. What do you know? They created the exact low of the day and the exact high of the day, London session, the exact low of the day, New York session, and check it out, New York session, that reversal off the low to end the day in consolidation. Over and over and over and over, you guys. It's the same exact thing. It's a fundamental aspect of how the market works, how the market manipulates the belief system of the masses on a daily basis, okay? And I'm pretty sure this was a news event that occurred right here. So some people say, Dylan, does news events matter? Like, what about news events? There's really volatile events like NFP and whatnot. What happens during those events? Do these structures still play out? Yes, and they play out even better. You're even, if you understand this concept and you understand that at certain times, right, at certain sessions, there's a breakout session, there's a reversal session, and you can see these things, right? You start back testing this for yourself. It gives you such a massive edge, you guys. You have no idea, because we're not using any indicators. We're not using any bullshit. We're not using any, we're not using what the masses use to trade. We're taking what the masses use to trade and we're reverse engineering it. It's reverse psychology, okay? Before I started trading Forex, I was studying hypnotherapy. I was studying neuro-linguistic programming. I was studying psychology, the mind, the human mind, how people think, how the masses think. So that's what brought me to the understanding of what's happening, right? We're taught something completely different. We are taught to trade the exact opposite of how we should. Why? Because our money is used to fill the positions of the banks. Nothing more. Once you understand this, you become the banks. You start riding their positions. You see, okay, this is the breakout of Asian session consolidation, right? actually, right here, breakout. Right here was start of London session. This was that breakout, perfect breakout. What do you know? Right here, just by understanding the simple characteristics that I told you guys right now, that I revealed in this video, you could have caught this move. Now, I'm not exactly positive that this was a news event. I'm pretty sure it was a news event just by looking at how volatile this was. It was a 100 pip move. You could have easily caught this 100 pip move just by understanding the session characteristics. That's all. Okay? However, I don't want you guys to start trading just by using this video. Please do yourself a favor and do not, just because of these 3 sessions and what I've taught you in this video, don't jump on the chart and start with 1,000, 2,000 with a real account and start trading. Please do not do that. At least dedicate a lot of time into watching our other videos, or join our academy where we step by step, like literally hold your hand while you take a trade. We're literally there to guide you every single day with mentorship, with opening your eyes to a bigger picture. Okay? Please do not just jump on the charts after watching this video and think you have the holy grail. You think you have it all, because a lot of people do that, and you know, sometimes maybe it works. It works a little bit, but they get greedy. They don't understand their psychology. There's more to it. They don't understand that there's different variations of this daily structure. What happens if, you know, London session doesn't break out and the breakout happens New York session? Can I still take that trade? Well, that's something that we go over in the academy. Okay, you guys, if you want to learn more, if you liked how I presented this class to you guys, if you enjoyed this type of content, that's what we have created the academy for. That's why I haven't been uploading as many videos as I have. It's because we have an entire academy with thousands and thousands of students from all around the world that are participating in what we have, with the courses, the group chats, the mentorship that we have in the academy. So right, there's daily live sessions where you can trade with us live on a daily basis inside the academy. As long as the market's open, we're doing live sessions. So feel free to check it out, forexia.net/academy. Like I said, you guys, I did not have enough time to go over this entire subject. So all of this, literally all of this and more, is in the academy. So that, I mean, so much more is in the academy. So like I said, do yourself a favor, you guys. Check out the academy, forexia.net/academy, if you did enjoy. If you learned something new, smash that like button, smash that subscribe button, turn on bell notifications, whatever that is. And yeah, I expect to be doing some more videos soon, uploading soon. So this hasn't been the last of me, and definitely enjoyed presenting this class for you guys. So make sure to share this video if you got some mind-opening information, and, you know, share it with friends, family that need this, because there's so many people out there that trade bullshit. It's bullshit, you guys. Go with the trend. The trend is your friend. Buy the support, sell the resistance. That's such garbage. I gave you guys a better understanding of the market that maybe you have had in years in this one video, in this one sitting, this one session. And I didn't even have to mention support and resistance. I didn't include a single indicator. How is this possible? Right? It's possible because we understand the fundamentals behind the market. We're not blind traders. We don't trade blindly off of indicators. We don't trade blindly off of just, follow the trend because it's supposedly your friend, right? All right, fam. Thank you, guys. Take care. Until the next video, peace out and see you guys in the academy. Take care, fam. Much love.